Welcome to another video. You're here learning with Vel, part of the APG University. I'm one of the head educators and mentors, and one thing that I really want to share with you guys when it comes to having an understanding with trading is being able to review trades that you've taken throughout the week, breaking them down and giving some sort of educational background into the reason why you took the trades, because at the end of the day, some trades are going to work for you, some trades aren't. So today what I want to do is just break down how simply reviewing your trades at the end of each day or at the end of each week can give you that 1% improvement to bettering yourself when it comes to taking trades. Now, we're all very familiar with a lot of different concepts. Some people use indicators, RSIs, MACDs. Some people use just simple price action like myself, smart money concepts, Wckyoff schematics. The list is endless, right? But what's really important is whether you're looking at trading from a blank canvas perspective or you're looking at trading using indicators, you still need to review your trades to figure out where you're going wrong, or of course where you're going right. That comes down to a key word which is very popular within this industry, which is journaling. Journaling your trades can really help you identify where you are going wrong, or even help you understand what pairs are better suited to your trading abilities. So this week has been a really profitable week, alhamdulillah. So what I'm going to do is just break down to you guys the reasons why I took these trades. I had 3 positions on gold. Gold is the only pair that I've traded this week. Now, really and truly, when you look at gold, you'll understand that if we go on a daily time frame, I've been calling, and I have said inside my private community on Telegram and Discord, I have said even on Instagram, globally, I've said that I'm looking for gold to retrace. I'm looking for a pullback. Gold has been coming down, and that's the reason why we've been able to short this. Now, we've had a beautiful run on the longs going up, but now, of course, when we're looking at price pushing down lower, we are, of course, trying to make sure we're in and out, just making sure that we're not getting too greedy, but making sure that we are getting in at a decent level. What is decent? To some people, you're going to have a target. Okay, my target is going to be 10% for the week. If I can make 10% for the week, I don't care how far this continues to fall, I'm going to be out of the market, because I don't want to leave myself victim to the market circumstances of, because I'm now up 10%, I've got a possibility of going up 12%, but in actual fact, the market pulls back and I end up with 7%. That isn't something that I'm looking to do, because I'm not willing to risk what I've just made. So because of that, I just want to kind of show you guys the most important thing when we're looking at trading is trying to understand the directional flow. If we can understand the weekly directional flow, I'm going to repeat this nice and slowly, guys. I'm going to put a blank canvas on this here. We want to understand the direction that the weekly is flowing. If we can understand that, then the smaller time frames are just merely pullbacks. Meaning, if the weekly, okay, is coming down and the daily is pulling back, now the weekly can be coming down lower, and if the daily is pushing back up, then this is just merely a pullback, which gives us the best opportunity, guys, to enter into the market. So for example, right now it's currently Friday. The market is going to be ending in 13 hours. But what's most important for you guys to understand here is the picture right now is bearish. Okay, now there's a few things to take into consideration. The first thing is that we would have anticipated a pullback once we saw this bearish candle here. So prior to this weekly candle, we could have anticipated a pullback, because naturally we've had 3 weeks of pure bullish price action. Once we go into the daily time frame, we could also see that this candle here, okay, which is on the 15th of May, we had a daily candle which is a lit block. Okay, this candle was the reaction that we needed. Okay, meaning this candle was the trigger that identified for me that the sellers were going to enter the market. Because of that, we wanted to see how price would close, which means we needed to see the market come to an end. So Over the past 2 weeks, we've seen, of course, that price has not closed above this candle. It's only closed inside of the candle, which has shown us that we are no longer looking to go for the higher high / higher low, higher high range, which means that after this higher low here, because price didn't push back up and show us this higher high, we could already start to put 2 and 2 together. One being that this was a lit block and we expected a reaction. Two, that we have failed, the market's failed to make a new higher high. So we can now start to assume, okay, that the market is most likely looking to react from this candle, which would mean that we are now looking to move away from being bullish and falling into a bearish formation. So as prices push down lower, of course, what we can see happening here is we've had 3 bearish candles across these 3 days, Naturally, we've had a pullback, but even though we've had a pullback, guys, we still have an bearish engulfing candle. This black candle is still double the size of this bullish candle, which leads us to believe that this bullish candle was just merely a pullback, which means that yesterday was the perfect day to enter some more shorts trading gold. So if we go down to a smaller time frame, I'm going to go down to the hourly time frame, okay? Now, what we can see here on the hourly time frame is we have here on Wednesday, today's Friday, guys, so just remember, but on Wednesday, we had this institutional candle, okay? On Thursday, price pushed back up into it at around 3 p.m. Once price pushed back up into this candle, we then started to see the exact same picture that we saw on the weekly time frame now occurring on the hourly time frame. What's the picture, Vel? Well, the picture is that price was failing to close above this candle, okay? Price made a higher high. When price came down, okay, it then pushed back up, failing to make a new higher high. So we already knew now that there, again, was 2 reasons for us to believe that we was going to get a lower projection with this, but also we do understand that this pullback was simply a pullback, okay? We had a nice bit of imbalance in here to be filled. Price did come up, play into this candle, and it reacted. Now, just to kind of show you guys my reasons for my entries, okay? If I go on the 10-minute time frame, and we are going to go across to this candle over here. Now, what I'm actually going to what I want you guys to pay attention to is, if I can just highlight it for you guys, I want you guys to have a look at what happened with this, sorry guys, with this candle here, okay? Now, with this candle here, I had an institutional candle on a 10-minute time frame, okay? Now, what I saw happen here was pretty much to perfection, meaning that I saw price push down, left some imbalance, came up, filled some of it, came down, failed to make a new low, but then aggressively did push up, and inside of this institutional candle, price reacted beautifully. With this reaction, I missed the first entry, guys. Why did I miss the first entry? Because I like sometimes to just monitor price to see if price is going to do what I think it's going to do. Sometimes I miss a trade because I'm waiting for a second or third confirmation, but in most cases, once I see the market reacting out of an area, it gives me more confidence to say, okay, I'm now going to shoot if price can return back up here also. So price did return back up, luckily for me, and I was able to enter 3 trades, okay? I entered 3 trades. The first one was a 4-to-1 R&R, the second was a 7-to-1 R&R, and the third one was a 10-to-1 R&R. Now, the results on these trades were magical, okay? Absolutely magical. We was able to accumulate over $8,000 on a single trade. And of course, the most important part was that when we look at the simplicity of this trade, it's based off of this 10-minute time frame, guys. A lot of people will miss out moves like this because they're not, refining the candles down and really identifying where price is actually reacting from. But we already understood from the weekly picture that we was bearish. So from the daily picture, after yesterday's pullback, all we needed to identify, guys, was where we'd be happy to sell from. So in yesterday's price action, because this was Wednesday's price action, in Wednesday's price action, we had a pullback, okay, amongst the bearish price action, which gave me a trigger, enabled me to actually sit inside of this trade. Once all of my 3 take profit targets was hit, I was out of the market, okay? Now, what I noticed yesterday was that price was a bit stale throughout Thursday, didn't really show us much. And then ultimately towards the New York session and towards the evening session, I started to see price actually accelerating and making some moves. So after I noticed that price was finally deciding to make a move, I then had a look at around the close of New York session. I noticed that, remember guys, I'm in Dubai, so my time is going to be a lot different. But I did notice that close of New York session, what we started to see here was that price was starting to do what it had already done yesterday. Price was starting to do what it had already been doing on the weekly picture. What was that? Well, on the weekly picture, we saw price failing to close above certain areas, right? Now, what we see happening here is the exact same thing. Price failing to close above specific areas, okay? And actually, price also retesting the same area that I initially got into at the first place. So even when price did push back up, I was looking to take a trade out of this area. One, because the daily picture was the pullback candle, right? I wanted to get into a sell as high as possible in hopes that price was going to come down lower, okay? Two, the next picture that I took into consideration on the 10-minute time frame was that price was retesting the same area where I had a really nice profitable swing from. And three, my third reason for taking a trade around this area was because once I saw price continuing to make a low, I saw the retest here. Okay, I was actually by the beach throughout yesterday, so unfortunately I missed these two entries. But what I did do was I was patient enough to see if price could pull back up, come towards some of this imbalance area here, and anywhere inside of this imbalance, guys, I was prepared to take a trade. So what I saw price push up, filled some of the imbalance, and then it dropped off. I did think price would come back. I wasn't sure if it was going to, but I wanted to see price make a low, and I thought, you know what, I'll try to re-enter off of this area here. Actually, what happened was I started to see price pushing back up, played into this candle, and that is the reason why I took this trade. And really, because I'm at a 4-to-1, I'm grateful. I could just be out of the trade now. I have left a small runner on, which I'll show you guys inside of my community, but I am targeting this area down here, which is the low. Now, this is just a prime example, guys, of why understanding price action is going to set you forward way more than using an indicator. Becoming heavily reliant on an indicator is going to make you dependent, okay, on something that, quite simply, guys, doesn't put you in control of understanding what's going on. If you're someone who wants to understand the full picture, who wants to be independent, someone who's actually trying to better yourself in terms of your trading abilities, then you need to learn how to trade by using a blank canvas. That is the best advice I could give you. When I started to learn how to trade, I never had that. Okay, when I started to learn how to trade, I was told I needed the RSI, the MACD, and when this would cross over and that would cross over, it would mean this and it would mean that. When all that really done for me is it never gave me a consistent profitable run that can enable me to say, I can quit my job, live off of trading, because actually these indicators do all the hard work for me. If it was that easy, everyone would do it, guys, and everyone would be millionaires. So it's really, really important just to remember, guys, from time to time, that you are not someone, okay? You are not going to become financially free, financially independent by relying on these indicators. I'm sorry, I have to say it. Don't blame me, don't shoot me in the comments, but I honestly believe that if you're someone that is relying on indicators heavily, you are not going to become financially free doing so. So, you know, what I've been doing over the past few years now is really defining the importance of specific candles, specific areas to enter into the markets. And I've put together a very, very easy to understand, beginner friendly educational course that really just helps people have a better guidance in how they can actually identify areas in the markets, how they can confirm their trading reasons, how they can tighten up, you know, loose ends. Sometimes people have been trading for quite some time and they haven't really been able to put together certain strategies. I've got 10 unique strategies, guys, combined with Wckyoff institutional trading concepts. And these concepts really do help me, and from a beginner's perspective, they're really easy. So I'm going to put some links below. You guys are more than welcome, okay? In fact, I invite you guys to click on the links below to join my private communities, and also feel free to book a call with someone in my team so that we can show you what we do, how we do it, but most importantly, how it can benefit you. Because at the end of the day, guys, we are approaching towards the end of the year now, and it's really about trying to put ourselves in a better frame of mind, a better space, because technology is improving at an alarming rate, and we're really seeing now over the next 3 to 6 months, we're seeing cryptocurrency coming back into the horizon. You've got prime ministers like Rishi Sunak mentioning that they're heavily involved in cryptocurrency, even though the crypto market's been heavily frowned upon. So it's very clear and evident that social media is right now projecting to us the things that aren't important or the things that we can't change, but the things that are happening that we can change are the things that we need to be taking heed of. And that's finance, Forex trading, Forex trading, Forex trading. Very simply, guys, you've seen here how I've been able to make over $16,000 trading gold. And this has been very smooth, very simple. I'm not saying losses aren't a part of the game, because they definitely are. But the most important part about what I'm doing, guys, is giving you guys a platform. Okay, if you guys have any questions, feel free to drop them in the comment section below. I'll be sure to cover them, whether you want me to cover certain topics, certain pairs, if you want me to review certain strategies, whatever you need, I'm here to help you guys and give you the raw, unfiltered truth about the process too. So guys, thanks for watching. I'm going to wrap this video up. I'll be back for another one. But always remember, guys, every day is money day. Don't forget to like, subscribe. You know the vibes. It's lit side. I'm your host, Vel. You've been learning with me today. I appreciate you guys, and I'll see you soon.